Most people want to believe that if you follow the rules they give us, your financial life will turn out fine. Work hard, save, invest in the system, and you'll be rewarded. But what happens when the very system that's supposed to protect you is actively sabotaging you? When countries, not just companies, set traps designed to keep you locked deeper inside the machine of capitalism. We're told the system is fair, that anyone has a shot at success. But here's the key truth most people discover way too late: the game can never be fair when it's played with fake money. Once you understand that the dollar and monopoly money have more in common than you were ever taught, then you finally start playing the real game. And the real game isn't about dollars. The dollar isn't money, it's an IOU at best. The real game is accumulating assets that can't be printed away: gold, silver, real estate, businesses. Once you see that, everything changes. You start spotting the moves they make to keep you weak, and you realize these random swings in gold and silver, they weren't random at all. The last 2 weeks of metals weren't normal volatility, they were intentional, coordinated. And if you can see the pattern, you can turn the next so called volatility into a payday instead of a panic. So the real question isn't what happened to gold and silver, it's why. Why would governments, banks, and central planners and whoever else go out of their way to slam metals? Because if gold and silver rise unchecked, the whole illusion of the system falls apart. What is good, Stackers University? It's so wonderful to have you here with me today. You already know this video is going to be fire, so go ahead and hit that like button. Let's go, because I'm going to show you 8 ways the government and institutions have tried to slam gold and silver over the last few days, and they weren't really all that successful. Number 1, let's start with the headline everyone's been talking about: the so-called 39% gold tariff. They tried to pretend that it was a false alarm, but I've already shown you this letter from the US Customs Director dated July 31st, and it specifically mentioned 1 kilogram and 1 ounce bars. Regardless, it provided the cover to move gold prices higher just to knock them back down, as you can see in these charts. The reaction: instant fear. Buyers piled in, gold spiked. Then all of a sudden, Trump jumps on Truth Social and says gold will not be tariffed. And just like that, the markets reverse. Futures drop over 2% in a single session, and spot gold price tanked. That's not random. That's the playbook. And let me give you the 4 steps. Step 1, create fear. Step 2, trigger buying or selling. Step 3, reverse the narrative. Step 4, profit off the slam. Second piece here. Here's how it actually happened. Starting on July 31st, okay? The gold bar tariff came out, as we've already established. Then the BLS job revisions. And by August 8th, gold futures were above $3,500 an ounce. There it was. We had fear, which triggered gold buying. Then the White House called it fake news, which it wasn't. And then they reversed the narrative. Why? Because gold was already ripping and about to take silver with it. Then this week, we got hot July PPI data, up 3.3% year over year, when markets were expecting it to be at 2.5%, and up 0.9% in a month when it was expected to be at 0.2%. Suddenly, the dollar strengthened, yields rose, and the metals got whacked again. Tactic number 3, and these tactics aren't new, they happened before. Central banks have been using gold leasing to flood supply for decades. Why? Because sudden future drops can knock prices down and trigger a cascade of automatic selling. Silver. We all know about the ridiculous number of trades per ounce of available silver. And it's not just the metals. Look at Bitcoin last week. Treasury Secretary Scott Bessent says, "We're not buying Bitcoin. We're confiscating it in a way to fight crime." All of a sudden, Bitcoin drops. Later, he clarifies, well, they might actually acquire it in a budget neutral way. Volatility all over again. Remember, this is the same Bitcoin that they were talking about outlawing that they now allow you to buy in your IRA. Number 4, and it's not just Bitcoin where the message shifts. Bessent went on Fox News recently and said flat out, quote, "We won't revalue gold. It's a store of value for the American people," end quote. Well, that sounds really assuring until you remember earlier this year when he implied that the U.S. might monetize its assets, and everyone knew gold was part of that conversation. So which is it? We don't revalue because it's for the people, or we quiet the dollar strengthened, yields rose, and the metals got whacked again? Ugly. This is where the game really shows. One message for public confidence, another set of tools behind the curtain for the rich and wealthy. Number 5, Goldman Sachs tariff analysis. Now, layer on Goldman Sachs' latest warning, and you start to see the game from a very different perspective. They say these tariffs aren't just political theater, they're inflationary fuel. We've already discussed the PPI numbers, and it's only time before it gets passed down to us as consumers. As Goldman states, companies have been eating about 64% of the tariff cost so far. But by October, Goldman expects consumers to have to eat 60-70% of this bill. Translation: higher prices, lower purchasing power, and no rate cuts in sight. What this really means is point number 6: stagflation. While no one in power wants to say stagflation, I'll say it: stagflation. They've talked about slowing growth and sticky inflation. They admit rates are likely to stay high, but they avoid the actual word because in their minds, it doesn't really exist until they have to say it does. The real truth is it's about controlling capital flows, steering where money goes when budgets are strained and bond buyers are scarce. If that means quietly slapping down metals to keep money in paper assets, well, they'll do what they got to do. Why? Because they are trying to prevent capital rotation from risk on assets to risk off. But what's really important is point number 7. You got to watch for the pattern. They use a simple formula because it continues to work for them. It's fear leading to market overreaction, leading to narrative shifts, leading to the price reverse. It's not random, it's a repeatable suppression cycle. And the faster you recognize it, the more you can flip it in your favor. This is where we get the buy the rumor, sell the news adage. It's one of the oldest tricks in the game because markets move on anticipation, not confirmation. FOMO chases buyers at the top, smart money sells into that FOMO. Finally, I want you to adopt what I call the so what, now what approach. And let me explain. First, expect the slam. So what? If you know the system is rigged, you stop being surprised when gold and silver get hammered right when momentum builds. This is simply a feature, not a bug in the system. It's designed and intended to shake out weak hands. Now what? So you train your mindset to anticipate the takedowns instead of reacting emotionally. When you expect the slam, you can plan your entry points, keep cash or dry powder ready, and treat manipulation as your buy the dip signal instead of a betrayal. Number 2, price doesn't equal truth. So what? Price action is not the same as reality. The COMEX paper market can dump billions of synthetic ounces in minutes, but that doesn't mean real physical price metal has lost value. The truth is in fundamentals, supply, demand, and long term accumulation. So now what? Separate the signal from the noise. Don't confuse short term suppression with long term destruction. Your wealth isn't measured in the daily spot prices, but in the ounces stacked and held outside the system. Number 3, flip fear into opportunity. So what? Most investors panic when they see red candles. That's exactly what the system wants: fear driven selling that feeds the manipulation loop. Now what? Develop the contrarian reflex. When they want you scared, see it as your chance to load up. Fear is the weapon that they tend to use, but it can also be your strategy. Ask yourself, who benefits if I sell now? Who benefits if I keep stacking? Number 4, watch cross market fingerprints. The so what is manipulation rarely happens in isolation. When metals get slammed, check what's happening in bonds, the dollar, and equities. A risk off move often explains the timing as capital moves from different places to the other. The now what? Stop watching gold and silver in a vacuum. Build your stacker IQ by scanning the big picture. Dixie up, bond yields down, stocks tanking. Those fingerprints reveal whether a smash is a panic driven or a policy driven move. It's not random, it's often coordinated. And number 5, play the long game. So what? If you're chasing short term games, manipulation will break you. The house controls the day to day. But in the long run, no amount of paper shenanigans can print real ounces into existence. Scarcity always wins. The now what is anchoring your mindset in decades, not days. Stack consistently, allocate wisely, and remember the government can suppress price, but they can't create infinite physical supply. Long after the scams are forgotten, your wealth is intact and still growing. This so what, now what framework basically flips the script. Instead of manipulation being a reason to distrust metals, it becomes the reason to own them smarter. When they slam it, they're not killing your stack, they're putting it on sale. The only question is, do you freeze or do you feed your stack? In the comments, do you think these slams are intentional or are they just noise? What do you plan to buy on the next SmackDown? Gold, silver, or platinum? Is Drstacker becoming a conspiracy theorist or is he onto something here? Or simply put an A plus in the comments if you got something out of this video, want to share some love, or just want everyone to know that you always stack smarter and never stop learning.